Hello, I'm Natalie MacDonald for the Finance News Network. Joining me now from leading resource sector services firm Sedgman to discuss its annual report for FY 2015 is Managing Director and CEO Peter Watson. Peter, thank you for joining us at FNN today.
Thank you very much, Natalie. Lovely to be here and really welcome the opportunity.
Peter, you've just announced your full year results for FY 2015. What were the highlights?
Thanks, Natalie. Yeah, I think for me the highlights were a great return to strong profitability. This represents the third half of that continuous momentum build in the organisation. And personally, it's gratifying that the whole of the organisation's contributed very strongly to it. From our projects business, our operations business and our functional support have all contributed very well to it.
And Peter, can you also tell us about the full year dividend, including the special dividend?
Sure. Our strong profit result has allowed the board to continue on with their policy of returning 100% of NPAT as dividend to our shareholders. And as well as that, as part of our capital management strategy, the board has declared and flagged to the market an intention to continue a special dividend, both of those fully franked for the period, and for the special dividend intended to continue for the foreseeable future.
Now to discuss the Sedgman business, can you give investors a feel for the Sedgman business and also how it has adapted to the slowdown in the resources sector?
We've responded in a number of ways to the current commodity cycle. We've leaned down the organisation. We restructured it 14 months ago to make sure that we're as efficient and effective in delivering our services as possible. We've consolidated some of our locations to make sure that efficiency improvement is sustainable across the organisation and across, in fact, the globe. We've also responded with a strong focus culturally on performance and performance management. And through that and through our operational capability as well as our engineering and projects, we're providing a differentiated offering out into the market. We specialise and have historically delivered lump sum fixed price project work, and in the current environment where capital is hard to find or tightly contested, capital efficiency and cost and time delivery assurance is very important in new work being developed. Through that differentiation, we're finding that the market is responding very well to our value differentiation, and we're in a position right now where the company is actually, I believe, building market share in quite a difficult set of circumstances.
What then, Peter, are some of your largest projects and how are they performing?
We have 3 current signature projects on the books at the moment, Natalie. The first I'd mention is the Guyana Goldfields project in the northern part of the Amazon in Latin America. We're just in the final stages of commissioning. That's been a greenfields gold project, $140 million US lump sum. And that project has taken us 14 months from contract signing to first gold production. I think a very credible world-class benchmark project in terms of cost and time, and performed extremely well. Closer to home in Groote Eylandt in the northern part of Australia, we're building about halfway through a manganese reprocessing facility for South 32 up at Groote Eylandt, and that project's performing extremely well. And further west over in Western Australia at Kwinana for Alcoa, we're building a tailings retreatment and processing facility for them.
I just wanted to touch on safety for a moment. What is the company's record for the last 12 months and also the company's approach to improving performance?
Safety is a very strong focus for me personally, for the board and for the executive, and in fact across the whole company. We've moved the conversation in Sedgman around safety from what was probably more a compliance-focused conversation now into a much more balanced and behavioural safety piece of work. We started that with some cultural development work last year, and we're now in a focus of making sure that people are self-aware of the hazards that they do face in the workplace, be it on an operations site or a project site, and trying to take people on a journey of self-awareness and self-responsibility for not only their own safety but their peers. We're starting to see some great benefits of that program. We saw a 27% reduction through financial year 15 of our recordable injury frequency rate, and we've seen some fantastic examples of excellent results in safety performance. We've seen projects that are delivering over 1.5 million man-hours lost time injury free in Guyana as an example. Our operations site at Red Mountain in Queensland has just surpassed 750 days of recordable injury free performance, as well as great production benchmarking. So it's a very important aspect for us. It's obviously a sustainability issue, and we have to demonstrate leadership and accountability in that safety journey.
Lastly then, Peter, what's your outlook for FY 2016?
FY16 remains, in our view, to be a difficult market, subdued because of the commodity cycle, albeit we do see good quality near-term opportunities. We're forecasting, and I guess the outlook statements that we would take forward into the market are plateaued revenue, but strong and sustained earnings, continuing to improve our production performance, continuing to focus on cost, and looking to continue to return good results for our shareholders.
Peter Watson, thank you for the update.
Thanks for the opportunity.